In this video, you will learn how you can find nice spots for potential reversal trades with the footprint chart. Hello guys, and welcome to a new video on my YouTube channel. In this video, I want to show you a live trade that I executed this morning on the S&P 500 and will explain you what I've seen and why I decided to go long. So before I will hop into the footprint chart, I will show you my preparation. My personal favorite approach to trades with market depth is always with key levels. Key levels are very obvious support and resistance areas. In this case, you can see there is clearly a key support area. This is the daily chart of the S&P 500 and there has been an obvious resistance zone. So what we can expect to happen after this momentum from yesterday, that the market is either going to break through this level with a lot of momentum, or we're gonna see some type of exhaustion and the market tends to retrace. And this is when I look at the order flow and the volume to see whether it is more likely to see a breakthrough or a retracement, depending on the liquidity that is provided. So when you look at the 4-hour chart, you can clearly see this is a very great support area with some fake outs here and there, but definitely a good support area to trade. Either, like I said, a breakout or a retracement. So before I look at the footprint chart and the order flow, I want to see what happened during the Asia session. This is why I check the subwaves and the volume of it. Here you can see the 4-hour volume profile and the 15-minute chart of the S&P 500. That means each volume profile represents 4 hours. So what do we see? The market continued to move down. There is the maximum level, the point of control. The market tries to break through this support area, moves down, and what we see is a lot of volume down here in exhaustion. So there has been a lot of volume. And what happens? The price instantly moves up and does not come back to that level. Interesting is to see that the maximum level is still up here. The point of control is still up here. We don't have a POC shift, means point of control. So the next candle shows we get back above this potential support and find support. Look at the next POC, it's still here. The main business, most of transactions are happening in this area, and this was probably just a fake out. Interesting to see is now what happens as soon as the market retests this support area. Do we break through? Do we retest this high volume node down here? This is what I wait for before I take any trade. I want to see what happens at high volume nodes, at these high volume areas. Do we see rejection? Do we see breakthroughs? That's what we are going to analyze with the footprint chart. This is the low of the night. The breakthrough this support area. Now before we analyze what happened, I want to show you what I use. I use the footprint chart with a volume profile. The blue borders show there were more aggressive buyers than sellers on this tick. The red one shows there were more sellers than buyers on this tick. Each black border represents the point of control of each candle. Means this is where most of the volume has been traded. On the left side, we see a horizontal delta profile showing whether there were more sellers or buyers on that price. Here we see the vertical volume, and here we see the delta again showing whether there were more aggressive buyers or sellers on each candle. Aggressive means market orders. The candle does not show any limit orders, only market orders. This is very important to understand. Then we got the volume and the volume for each second, but it's not that important right now. So what we see is the market breaks through that support during the Asia session. It looks like there's a lot of momentum coming in. And what we see is the market moves down. We have a very negative delta. There are way more sellers than buyers in these two candles. We have high volume, 5,000 contracts traded right here, and another candle with a delta of minus 310 and even 6,000 contracts. Interesting to see in this candle is we almost have the same volume and the same delta like in this candle. We have a delta of minus 420, a volume of 5,000. And in this candle, we have a delta of 490 almost, and a volume of 4,180. This is almost a mirror candle, just with buyers instead of sellers. So we get back to this X support and our resistance area, and we see how volume decreases. And then we get the breakthrough and the market stays above that support area. So looks like we had a fake out here in stop loss fishing. But now important to see is what happens as soon as we hit that support again. This is the 5-minute chart of the S&P 500, the time frame that I usually trade depending on volatility. And I want to see what happens as soon as market retests that support area, as I've mentioned before. So what you always need is you need a plan for a trade. So you need to know whether you want to trade a breakout or a rejection of a level. In this case, I combined both together because I was waiting for the market to reject off this level and then to break through this resistance. This is considered a range, so I don't want to be in that range. If I see any evidence for a breakout, then I would take it, and that's what I did. Now we're gonna zoom in and check the footprint chart. What happened? It had the opening. We see nice momentum to the downside here. We had a very negative delta of minus 340 almost, with a little bit of higher volume, 1,700 almost. But what you can clearly see is the closer we get to this support area, the less negative delta we have. In this candle, a negative delta of almost minus 90. And in this candle, a negative delta of minus 80. And what happens as soon as we hit that support is we have a delta shift into the positive territory. We have a delta of plus 27 and way higher volume. This shows there's something happening because we have the highest volume, but way less impact. I mean, look at this candle. This is a very small candle, but we have very high volume. Now see what happens. We see down here is an exhaustion. There is not much volume that has been traded. There's no open interest. Instead, we see a lot of buyers down here. Maybe profit saves from that move, we don't know. But what we see is high volume and a delta shift. So buyers are coming into the market right here. The point of control where most of the transactions happened is negative. Keep that in mind for the next candle. We see a move up again, and now we want to see what happens as soon as we get a retest, another test of the support. Now again, look at this high volume, 4,200. Now we have to keep in mind that this is the opening, but look at the impact of this volume. We have a red candle, an attempt to break through, again an exhaustion, even though this is the opening, and the POC is now blue. We have a positive point of control, the support is holding again, and we have very strong evidence of a reversal. Now we stay in the positive delta, the volume is decreasing a little bit as this is still the opening, and the price moves up above this resistance, and now we have a very, very, very nice evidence of a breakout, because it looks like that market finds support. What do we see in this candle? We suddenly have a very negative delta. Sellers are trying to push price down, but look what happens. When I zoom out, you can clearly see the market has found support. But there were lots of sellers down here, and these sellers had no impact on price. So we have sellers, we have a green candle, we have a divergence, or called a delta divergence. So when we see there are a lot of sellers in the market, but the price is not moving down, we can assume that buy limits are absorbing aggressive sellers here. Now we're just looking at the footprint chart. I'm not looking at the order book and the smart tape. In this moment, I've seen that buy limits were coming into the market to support this breakout. And we've seen that after all these buy limits were absorbing the sellers, that more aggressive buyers came in to trade that breakout, to anticipate that breakout. And this is where I got into the market. So just a little recap. We know there has been a fake out during the night. The market did not retest this area anymore. Instead, we have a retest of an important support zone, the high volume node. We see exhaustion and again exhaustion. We have a double exhaustion, or the second exhaustion confirms that there's not much of open interest in the market. The market moves up again, rejects off the VWAP. What we see, there's the VWAP, the market rejects off, breaks through this VWAP, gets above the resistance, and sellers are getting absorbed. This is when I go in. So here you can see my trade. See this candle, this is where I place my buy limit order. This is the candle here in the footprint chart. Got my stop loss below this range, below the VWAP. And yeah, price moved into my favor very well. Now I should consider to take profit very soon. Let's see, I wanted to finish that video first. But guys, if you got any questions about this setup, let me know. If you need to know some terms or got any other questions, just use the comment section. If you like content like that, leave a like. If you want to see more videos, more footprint setups, more trades that I execute every day, let me know. I'm out for now. Have a great day. I see you on the next video.